Welcome to the latest in the series of Fitch's virtual investor meetings. My name is Ben McCarthy. I'm the head of Fitch's analytic team for structured finance and covered bonds in Asia Pacific. Today I'm joined by Hilary Tan. Hilary is a senior director in our structured finance team and heads up the analysis of the Chinese securitization transactions. Hilary, thanks for joining me. The Chinese securitization market has seen enormous growth the past 5 years, from virtual standing start in 2013 to the equivalent of over $200 billion in 2017. Can you give us a brief overview of what the Chinese securitization market looks like?
The China securitization market is essentially made up of two primary trading markets, one being the China interbank bond market, which is regulated by the CBIRC, and the China stock exchange market, which is regulated by the CSRC. Fitch's rated portfolio at the moment consists primarily of auto loans ABS, and we do have one RMBS transaction outstanding for a bank originator.
Our portfolio is very much in the interbank bond market program, or is there a reason why we've gravitated towards that as opposed to the exchange market?
Yes, in that market, in the CAS market, the legal regime that we rely on, or the transactions rely on, is based on the trust law, whereas in the CSRC market, it does not have the similar legal regime that is robust enough to get us comfortable regarding the bankruptcy remoteness of the transfer of assets from the underlying counterparties.
Okay, and as you say, we've been rating mainly auto loan portfolios, but what other types of assets are being done currently in Chinese securitization?
So at the moment, since actually 2016, in the last 2 years, the asset classes have been very much consumer or retail oriented. So in 2016 and 17, most of the asset types that we see are in residential mortgages, in auto loans, as well as personal unsecured loans. And this is not incongruent with what we see in the banking sector as a whole, where household debt has been on the rise, and we are seeing a growth of 20% compounded rate on average of 20% since 2011. The rising claims on households has been the largest component of new credit loans in the banking sector, and has been one of the major growth element in credit growth in 2017 for banks.
So Hilary, if we just focus on the rated portfolio we have in China, it's largely auto loans. What's the performance been like?
The performance has been very good and has fared better than our initial expectations from when transactions close. Fitch believes that the quality of the loans underwritten by auto finance companies are very strong, and the performance just speaks for themselves. As the industry continues to develop and penetration rates for auto finance companies continues to increase, we continue to see defaults improve in the last 3 years. And bearing in mind this has been on the back of a slowing economic environment. However, this has been supported by relatively tight labor conditions, as well as consumer confidence being at an all-time high.
You mentioned earlier the growth in household debt in China. Is that something that investors should be concerned with, and will it have an impact on ABS performance?
Having seen such stellar performance in the last few years, we do think that performance as measured by gross defaults may have reached bottom. The AFC sector has grown significantly in the past 5 years without having seen a corresponding rise in credit losses. Fitch thinks that this might embolden some auto finance companies to take on a little bit more risk to boost their portfolios. However, this will need to be balanced by underwriting discipline, and Fitch believes that the AFC's gross default may range between 1.2 and 1.5%, which is what Fitch's base case assumptions are generally. Touching upon underwriting discipline, I think it goes hand in hand with regulatory scrutiny. whether it's an LTV limit in financing a new car in China, which by the way is 80%, or whether it's a maximum LTV limit in purchasing a home in a certain geographical location, regulatory scrutiny is prevalent in China. And these elements of regulatory scrutiny should help sustain performance.
Thanks, Hilary. Thanks for joining us and providing your insights. And thanks to you all for joining our virtual investor meeting. If you do have any further questions, please feel free to contact Hilary or myself, or contact us via the email address on screen. Thank you very much.